Good
7:30.
morning.
Hey,
It's
it's Tricky Nic Chahine joining us here on Benzinga's pre-market prep. Nick is a MarketFi maven and the author of Create Income with Option Spreads. Nick, we need a voice of reason here and some calm here. Dennis and I are just getting way too excited. Give us your like nice calm thesis how nothing has changed and we just got to play what we see.
Nothing has changed. The only thing I wrote last week was that change was the uncertainty of Draghi, whether will he, can he deliver on his promise of 2 years ongoing. And now he did deliver, and they did deliver a substantial amount and to an undetermined period of time, which is data dependent, just like the Yellen's plan, which means they're just reacting to what they see in the markets. That's good and bad. A, they're reacting, so they're behind the ball by definition. But B, it's good because they'll be here for as long as we need them. Now, all this is based on the assumption that they're actually able to save us from disaster if the disaster does hit. And by the way, this morning's open so far is not a disaster. We just hit yesterday's pre-open lows or overnight lows of Sunday, Monday, which were 25 and change. I can't remember exactly the level,
25 and a
25.
half.
There we go. We just probably touched it just now. And all because of Apple just shed $1.50 or whatever it was. It's about $2 and change off the highs of midday yesterday. Mid morning yesterday, I said it could see 112 and a half. I didn't think it would drag on until today. But it's all binary this week, guys. You know that. It's all about earnings, and we saw how that happened this morning. Earnings came out for a few disappointers, and bam, we went from, a mild red open -9 points to minus 28 points in minutes. And then I think the economic reports came out a little disappointing as well at 5:30, 7 minutes ago, which added, we dropped another 5, 6 points from there in the ES.
oh,
So
okay, Nick. I just want to talk. You mentioned Apple, and I do want to talk. They are going to report here tonight, and we've been seeing some currency issues from Procter and Gamble cited currency here this morning. UTX cited currency issues. Microsoft took a 4% revenue hit on currency. We know Apple has a lot of overseas sales. Is that going to hit their earnings?
I mean, mathematically, you mentioned it. I mean, it should, right? I don't know how strong we are against the currency, where their sales are coming from China, from Europe. If it's heavy against Europe, then yes, they're going to be hit ongoing. Whenever they're gonna warn against it going forward, because if they have a lot of European sales, the euro just took a tumble against the dollar because of the QE. So that might be an ongoing note that might freak out people. Like I say, on the earnings, you've heard me say it. It's just a complete lotto ticket. I have no doubt that Apple will deliver good numbers as far as sales. They're going to sell every widget they have. The watch may be questionable, but they might also, say some good things about Apple Pay, which would be the next big thing to come from them, in my opinion. But how the investors react to those numbers really what matters, and you cannot forecast that. No one can. It's all based on sentiment, and sentiment, I've said last week, is very fragile. Don't buy sentiment. Trade it, range it, because they're gonna whipsaw this way and that way, and only takes one headline to freak everybody out, and everybody hits the sell buttons because we're at such high valuations. Not valuations, levels, I should say. Some valuations are reasonable, but the price levels compared to what they were a few years ago were pretty high. So nothing has changed, which means I continue trading my thesis, which means I leave 5% to the upside, I short it, and I hedge with a few longs that are 5 to 8% to the downside. So I'm selling spreads, lotto tickets like you called it the other day, leaving room for a 5% bump. I'll give you an example. I shorted the Nasdaq last week via an ICBM trade for
That's got to
June
be
at
working.
47.50. The Nasdaq. That's how much
Yeah.
risk I'm leaving. And probably today I can book some profits in it. That depends on what happens on the opening wish. If not, I'll leave it as a short to Apple, Google reactions to earnings. I'm short Apple into the earnings via a little bit of puts, nothing conviction based, nothing full size trade
Yeah.
investment. It's just a trade to be participating. Google, I think it'll be either over 600 or 470 after the earnings. That's my opinion. I don't think there's going to be anything mild in the middle, and these earnings are going to be wild, just like we saw with the big guys.
Take go ahead. Taking a look at the Google here, and I wanted to email you the other day here as we got back up to that 540 level. We had talked about it under 500. Did just respecting that resistance level going back to the trading range since mid-November? Were you able to get anything off in Google when it got up to that 540 level?
Last time I did the Google, I shorted it just before it came back into favorable sentiment. So the last short I did was 570, 567 and a half, 572 and a half, I think it was, credit call spread, and I got out. And I've been watching it because I did not have any convict levels with convictions. This week now they're starting to paint the picture. When does it report? This week, right? Friday, Wednesday, Thursday, something like that.
Let me take a.
Google, I don't think they're till next week. Brent, when
No,
does Google report?
regardless, soon.
Yeah.
And this week they look like they want to be around the 530 on the Goog, not the Goog L, because I have it in front of me right here. And it finally showed a little bit of support via the open interest with regards to put positions, and it starts at 520 small and it builds 520, 515 stronger, 510 even stronger, and 500 looks like the line where they want to defend. But the resistance starts at 530, 535, 540, and 550, but nothing above that that's significant. So the fight is right around where it is right now, and they're willing to sit there and probably build positions into the earnings. And then when the earnings hit, all these open interest are really nothing because it all depends on which direction they want to run and then the momentum it gathers. Look at this morning Caterpillar. I mean, this is an insane move in Caterpillar. I love shorting Caterpillar, and I wish I had. I didn't. 86 yesterday, 79, 78, 77 the low this morning. That's just massive.
And voice of reason has rallied the S&Ps here 4 points as Nick came on the show. We had just ticked yesterday's low of 25 and a half. We went to 25 and a quarter, and then all the pre-market traders listening to Nick bought yesterday's low, and now we're starting to get a little
We're
bit.
rallying back.
Yeah,
The
wait.
fade trade. Are we going to get all these losses back?
Yeah,
No.
so you don't want me to say what I wanted to say after that. Well,
Uh-oh, here comes the bearish comments. Everybody's
no,
going
no,
to be
no,
so
no, no, no bearish. I'm just range trading. From the last couple of weeks, the market's actually more than that. I remember telling you almost word for word that the markets want to be between 2000 and
You do.
2050,
I remember that.
not close to 2100, and that was when we were knocking on 2100. I said the open interest for the next few weeks looks like this is how it's laid out, 2000 to 2050, and it still is. So if we do whoosh down this morning, I expect support based on the open interest. Now
And
headlines
where
will.
specifically do you expect that support? Do you have like an
Okay,
actual
if we're
number you're looking
talking
at?
about if we're talking about the SPX,
Yeah.
2050 is a magnet, meaning it is a high point of interest and it's neutral, so it'll be support on the way down, resistance on the way up. Anything higher is resistive to a certain degree or another, and anything lower is supportive to a certain degree or another, except that 2000 is also a magnet and it's the high point of interest that I'm looking at, and it's supportive. So if we get to it, it should act as support, but it also has pull towards it. So it may bring us to it, but it'll help us once we get there. Anything in between is supportive. There is a stop at 2025, kind of like 2000, only a lot shorter. So it's smaller in nature as far as magnetism. Then anything lower than that is all support. So I don't expect a disaster. That's why I'm saying range trading works best. So an iron condor this week would have worked perfectly if we stop at 2000. If you knew the levels, and if you don't want to play the week itself because it's dangerous, because if you sell spreads in this week and the spread goes wrong, then you have no recourse. It prices in badly immediately. So why not go out in time and sell the spread out further away from trouble, and you collect about the same premium and you sleep better.
Uh,
Google does report Thursday night, so you were right there, Nick. It is this week. Facebook is going to report Wednesday night. And how are you playing the Facebook?
I have not set anything for Facebook. I'll probably buy a lotto at the time before, just before, last minute. And I have not looked at a chart of Facebook, so let me pull it up. Um, it's meandering at that level where it's been consolidating between 72 and a half. It bounces off of that level well, and then it's kind of lidded there at just over 80. So I really don't know how sentiment. I mean, they have a billion users, if not more. It looks like it's got resistance in the open interest, especially at the 80 level and the 79 level. Some support at 75, but not a lot. So it looks like everybody, it's easier path down than up, but it's a coin flip. So the reaction of how the markets want to play Facebook is a coin flip. It doesn't look good for the reporting's sentiment this week based on what happened this morning. So I'll wait and see if anybody else reports and gets rewarded. Then I'll say, well, okay, maybe they want to give somebody a pass. Might as well be Facebook. But based on the open interest currently, and based on the fact that it's close to resistance, and I don't have an opinion yet. I guess yeah, we
What
can we can
about?
you can.
I'm looking at this one, Nick, and this is going back. This was the last earnings that it had. Big drop. Came back up and made a new all-time high here. Dropped again. I mean, this 74.78 level is really. I mean, beside if you take out that bump up to the new all-time high, and I guess this was the bump after the earnings here. What about a strangle there or something like that? I mean, you
I,
think
I,
are they gonna make you pay too much for a strangle on something like that? Because to me, this thing has been for the better part of 3 months in a 4 point trading range. If you take all the volume that's traded between 74 and 78 here, man, this thing's either got to go to where we closed at 77.50, trading down in the pre-market 70 cents. Can't you just see this thing at 66 or 86?
well, it could be, but it hasn't done it before. So I don't know if it has that much room in it. If I look back at the one, two, three, four earnings, it's almost a 50-50 reaction as
Okay,
to how to.
not good enough.
So So the reaction is, like I said, people don't believe me. I get so much flack for it, but it's really a coin flip. It's Vegas time to
Mm.
invest big money into earnings. It's really a Vegas short term. Long term, yes, Apple could be like Jim Cramer says, it's a buy and hold type of a deal. But short term, do you want to see get cut 10% for no reason if you can either buy puts and protect your current position or stay out of it for a day and then invest into it? Even if you're willing to miss out on a few bucks upside. I'd rather sleep better. So it's strangles. I've never been able to put them to work where I'm comfortable with them. You have to trade your personality.
Comfort
It's
zone.
not my personality, and it seems to be much more work than worth it. If I wanted to put that much effort into it, I'll buy a debit put spread and sell a much lower credit put spread to finance some of that debit spread, and then hope that the drop will stop just ahead of the credit spread, and then I'll make money. Otherwise, I'll break out even or so. So maybe I'll do that instead of a strangle. Um, I'll play with time maybe to make it work for me somehow. But this strangles are always so expensive on these fiery stocks, and for me, they're just not worth the effort. I'd rather pick a direction and go with that.
Nick, I don't know if you were on. Dennis and I were having a lively debate here on Caterpillar, and you said you love to short the stock here. I think of all the charts that I've seen here this morning, this one is the most concerning to me. This $80 level that's held up since the middle of 2012, it's being taken out here. Dennis is a little bit more bullish. He thinks it's going back to 90.
Oh, he puts words in my mouth. I said it wasn't going to 70,
I,
so that
I heard you.
automatically
I heard
means
you.
I
I was
assume it's
listening.
going to 90.
I was listening to the steak dinner bet and all of that.
I'm thinking it doesn't see. I said I would write him a paper put. He was saying this is going to 70. I said I'll write you his paper put 3 months out here right now at 70 because I don't think no way Caterpillar sees 70 in the next 3 months. But
No way is a very dangerous term.
okay, you're right. That's good.
I,
That's
I can make an argument for 70 in the next couple
you're
of
gonna
Go
days.
take.
ahead,
You
go ahead,
want to take the
Nick. Go
paper
ahead.
puts?
Nick
I can,
Chahine,
I
market
can make an
expert.
argument in the next couple of days for it to see 70.
$70 in the next couple of. Okay, I gotta hear this. I'm sitting back in my seat. Okay, got my popcorn. Got the popcorn. Let's hear this argument there, Nick.
Well, if you look up to pull up the 2-year chart,
Okay.
and let me show you here. Actually, if you can't do it, I can do it for
I
you.
got the
But
monthly. A monthly. I got the monthly here.
yeah, if you pull up the 2-year chart, there's a pattern. If you can draw a line against all the lows, 1 second here, that start at a date for almost 2 years ago, and you can see. Let me pick out the date, and you pick out that low, 422 2013. So 2013 around the end of April, and you draw a line on all the lows, and it just got recently broken, and today it just got majorly violated. So that I think that could gather steam, and it could take it a lot lower. So I'm going to throw it in the chat. I think you guys can pick it up there. I don't know if there's a delay on time or something else telling me the file is too large, but anyway, here you
That's
go.
nice.
Okay, so it may gather momentum and people may hate it and they want to bring it down just in spite because of the energy it's collected on the way down. That's my opinion. As far as the open interest, let's see if there's some stop areas for it. But the reaction this morning is very violent. No one can argue with that.
Oh yeah, for sure.
Yeah, well, you know what?
There's 9 more points. That's a long ways down for a
They probably
stock
don't
that's got
even
a three
have
and a
them.
half percent dividend.
There's going to be a lot of people in the money today on those puts. So you know what? Now I'm starting to argue against myself.
He doesn't know which side he wants.
Oh, now
That's
if
why
you're
we have a market. We can trade with ourselves, I
now
guess.
if you
I,
ask
I
you,
can say one thing. It's likely to catch a bounce today, closer to recover some of this downside in order to flush those put positions out because I don't think they're going to let them get away with it, and it's all the way up to $83. So keep an eye on that.
hey Dennis, where's Ingersoll Rand at? Is there anything going on? I see it just traded down to 64.74. I know that's always my lame correlation to Caterpillar and Deere, but I remember smacking that
That
stock
piece has
around.
been strong. IR has really not been correlated with them at all lately. Deer is always
Yeah,
correlated, but IR has been strong. Let's go look at Deer though, because we haven't looked at it here today. And DE is actually trading down 3 points as well. So yeah, but it's tough for DE, tough love there because they don't even report anything and they get smacked 3 points. It's because Caterpillar's in some negative stuff. What do you guys
Yeah.
think about Deer?
Well, Deere, I don't. It's so violent for such a consistent stock, in my opinion. I don't know what the deal is with all these ups and downs. So, I don't know what kind of premium they offer in the options market, but I don't like the trend in Deere. It's so choppy. I just
Yeah,
can't get a beat on it, really. I
right.
mean, look at it. It trades like a Momo.
Nick, final thoughts for investors here. I know you, like you said, you've rallied the S&P 5 points. You think we got that pre-market low in, and we'll just float back up for the remainder day and see what Apple does after the close?
Yes, because I want to say something that applies on the way up and on the way down, and people don't give it as much attention is don't chase up or down. It doesn't work. You're buying other people's profits. If you're not already on board of that train, just wait it out. Go get a cup of coffee, come back, and think about it. Up or down chasing will cost you money. You're buying somebody else's profit.
That is a great quote there. I like that. You're buying somebody else's profit. And this is the market we've been in. We've been in this fade trade market. We've been talking about the fade trade the last couple of weeks. And if you're fading the moves, you've been getting rewarded.
Yep.
Okay, Nick, we got to let you go do a few imbalances here. Nic Chahine, he's a Market 5 maven and founder of author of Create Income with Option Spreads, rallying the S&Ps here 5 points this morning. Nick, thanks a lot. We look forward to talking to you next week.
Thanks, guys. Have a great day.
Hi.
Thanks, Nick.